Hey everyone, this is Michael, and this is the Stock Picks weekend video for March 26, 2022. So we're going to go first into the current market environment. We're going to review our current positions, which are growing, and we're going to go through the ready and watch lists and review the stocks on that, which is also, we're getting more and more stocks. So before we start, I'm not going to read this, but please pause the video and review our legal disclaimer. And let's go ahead and get started. So our stock environment indicators is at yellow. We're sort of heading more towards green, which we haven't seen in a long time. I mean, over a year. So the best strategy right now, for a long time, it was like we were getting to short pops, more than just a few days, and then they usually would sell off. But since we have a new uptrend in place, we're going to look to hold stocks for longer. So we might be looking to do swing trades, which could be, a week, 2 weeks, 3 weeks. And if the uptrend really starts gaining steam, we're going to try to hold it for bigger moves. So we'll see what happens. Of course, everything's always flexible. So we never like to lock ourselves into one thing because that sometimes doesn't work and that can change quickly. So because the market is actually acting better, we've upped our exposure to a maximum of 35%. For my own personal portfolio, I'm about 35% also. So and it seems to be a good exposure at this point. And we're just getting better and better performance. We're getting more stocks breaking out. The breakouts are holding. They're not failing. We're getting less reversals. And we're just starting to get profitable on our positions. So we're going to continue to add something. I don't think we're quite at 35% in the portfolios. I know we're not in the long-term outperformer portfolio. But we're going to continue that, and we're going to try to lock in some profits too as soon as we can, but we're not there yet. So we don't want to get too much exposure without any kind of profit cushion in our current holdings. So again, that's something we just always try to do is we're looking at it from the point of view of risk, not want to have too much risk. You don't want to put on tons of exposure and have no profits but have, when you add up all your stops, you have 3 or 4% loss if they all get hit. So, we want to creep in and creep out. That's what we always look to do. And then just recently, we're getting more and more stocks that are coming off the watch list onto the ready list. So that's all a good sign. So let's go ahead. I'm going to move to the charts. Give me 1 second, and we're going to start with the portfolios. Okay, so let's get started. Our first position we have is Molina Healthcare. There's been a lot of healthcare stocks that are starting to make some moves. So this sector, whatever reason, seems to be one of the where money's flowing. You can actually see it's group 41 out of 197. So we're in the top 25%. And we bought it coming out of this cup with handle breakout. And looks like we're about 3.5% up from the breakout point where we bought it. So it's looking good. Earnings and sales the sales are strong. Earnings are starting to come back into the positive. So all in all, it looks pretty good. I'll take a look at the weekly. And yeah, we have a nice rising RS line. We've getting support. We have quite a lot of weeks up, and the ones that are not, we had a huge volume on this day. Not quite sure what happened there. I think it was triple witching or quadruple witching. And then for all these charts, I've brought up my growth checklist. And you're always trying to get close to 99 as possible. This one's at 68%. So we like to look at this as just showing some of the things that are strong about the company and what some of the things are not. So the better, the more the better. But it's not necessarily something that we're going to say, well, no, it's a low score, so we're not going to do it. But we do try to get stocks with higher and higher ones. So that's Molina. Next one is Allscripts. Ticker is MDRX. This one has been giving us, we bought it coming out of this little area here, which is giving us some resistance. We came down to the 21-day moving average and sort of got support there, which has been holding since its breakout. So that's a good sign. Checklist at 71%. We're slightly down on this. We bought it 22.26. Yeah, so we bought it right above this resistance area, but this day reversed on us and then came back down. But it's still looking good. There's nothing really wrong with this stock. It's acting well. The RS is coming up, making new highs. It's in a nice long-term uptrend. So we're just sort of, it got us on a little downtrend right after we bought it, but it's not doing anything wrong. So we're going to continue to hold it. Next one is Carlisle, ticker is CSL. They're kind of a diversified operations company. Indus Group's 31, and that's been rising. Again, we bought it coming out of this little consolidation. It just kind of reversed on that day and is just hanging in here. It's almost like forming a little handle. No real, in terms of volume, looks pretty good. We are getting some little spikes here, but if you notice, like on this day, we closed at the 47% range. It was not really, anything above 40% is actually considered accumulation. And then we had another down day here, and it was on the lower than average volume. This is average volume line here on the red. So it's looking good. Just hasn't quite broken out, but I would expect that this is going to make a move. And the next one is Hewlett Packard. Interesting, is one of the few companies, wrong ticker there, HPQ. It's one of the few tech companies that's actually making new highs. So interesting. We do have the RS blue dot, which shows that we were actually broke out and we made new highs in the RS before we made new highs in the price. So this has been going on for a while. And this one we just got, we're up about 2%. We bought it coming out of this little breakout here. It's nice that it's cleared out above all these previous highs. You can see that, between 38.50 and 39.50, the sellers were kind of lurking around there, and we've gotten above that. And here you can see, this kind of level had been giving it some kind of resistance. Iris is moving higher. It's got pretty good sales and earnings. Looks pretty good. So that's our gross portfolio stocks. We did buy O'Reilly Automotive for our long-term outperformer portfolio. It's kind of hard to say. We like this because let's take a look at the monthly. This is one of those stocks. This is what we look for, is that stocks that just have nicely rising RS lines. It's a little flat here, but it's still continuing higher. We have nicely rising price over, here we have the last 14 years, or actually more if you go back a little bit. And then during, have times, of course, where it's corrects for whatever reason, and then this was a coronavirus crash. So it's acting really nice on a long-term level. So we are just coming into this, actually breaking above this little area here, not the original. Usually we're buying into these little blue areas, but we came out a little higher there. So it's looking pretty good. This one, earnings, and you can see over here, earnings and sales are just been growing tremendously. And they're expecting almost $37 next year. We're at 33.25 this year. So this is just a company that's been performing for a long time, very, very well. And looks like it will just continue to perform well too. We are into group 62 out of 197. So it's in the top part. So we're going to go ahead and now look at our ready list. And I probably have to move a little quickly or this video is going to be probably about 2 hours long because we're getting a lot of names. But real quickly, here's Wave Dancer. We're just in the buy zone, but it's been very volatile. We were in this and it kicked us right out. I don't like the volatility, but we're getting more at least we're getting more up days, and we're kind of tightening up here. We can see the closes. We've had 1, 2, 3, all getting tighter closes, sort of like what we had over here. But we do want to see it calm down a little bit, and we may try to buy it again if it breaks above this. It's one of the few IPOs that's just making almost just about new highs. Most of them have just collapsed. So. And they were in kind of the interesting cybersecurity, blockchain business. So it's kind of got a lot of the interesting keywords that people are looking for. I'm going to skip HPQ because that's on this list, but we've already looked at that. Here's Brown & Brown. This one, we are actually looking to buy it right above here. right when it broke above this. And so we are, we've just got above that. We do have some resistance around here, but this could be purchased here, sort of an early entry. If you wanted to wait, you could wait till it gets above 70.50 and or so, even 70.80, 70.76. This one, we don't like the fact that it's come up so much, but it did have some pause here, which was constructive. Didn't really, it just kind of hung there, above this recent, got supported this recent area here, which was resistance before, got up here and came down. So it's looking pretty good. That's on our watch list, the ready list. We have a new one, which is called Will Scott Mobile Mini, kind of a similar looking chart. And this one just broke above this little area too. And here's our pivot price. So we're just there. The buy price is 39.65. We're 2 cents above that. This could be purchased. We kind of broke out a nice strong volume on Friday. We do have some supply sitting over here. So some of these people that bought in the 40s may be looking to get out. But we never have perfect charts. We love it more when it breaks out into all-time highs because you don't have that issue of sellers that have but people that bought are now underwater and they're trying to get their money back. So here we could have a little resistance. Ideally, it could just blast straight out of this and leave all these leave all this area behind. It means that there really wasn't a lot of sellers that were trying to get out, and there are more bulls looking for higher prices. The next one is Anthem, ticker ANTM. This one shook us out. We owned this, and we got shaken out on the move. Could be the stop was a little too tight. Ideally, the stop would have been below the red 50-day moving average, but so it got us out. We may look to get back in, but we'll see what happens. We already have one healthcare one in Molina, and we do have Allscripts also kind of in the same sector. We just have chalked this one up as our timing wasn't perfect on this, and we got kicked out. So, but it could be purchased if you don't have the other stocks. It's in the buy zone, and it looks good. Next one is JB Hunt. This one, interesting. This is what you sometimes see. We had a really strong up day. Not quite sure. I think there might have been news that Warren Buffett's company is doing some kind of deal with them. I don't remember exactly. And then we had a whole bunch of days where it just kept going down and down and down. And if you notice, it came right down to the previous high over here, about 208. And then we had a shakeout on Friday down to the 21-day, and we've come back up. So this is buyable right here. We kind of call this like a pullback buy. It's come back up, and then ideally you would kind of buy it. It would open down below this high of this day, and then come back up, and you'd buy it right in there. But it's buyable right here. But just to be safe, if it comes back down below on Monday or Tuesday, just wait again, see what happens. But this is looking pretty good. It looks like we just shook out some people here, and wouldn't be surprised if it just continues higher there. The final one is ticker ACM, and this is ACOM Technology. You kind of see a lot of similar charts. This one didn't quite make a W, but it's broken out also here. It's construction management, so for transportation and facilities, environmental. So we're kind of all in the, still kind of in the cyclical area, construction, planning, building heavy construction. So these are all sectors that seem to be moving much more than straight tech. So this is one that's also ready to go. Now on our long-term performer ready list, we do have a few. And the first one is Costco. It is right in the buy zone here. It's looking good. That's buyable. We do have we also have JB Hunt, and we also have O'Reilly, which we already own. So let's go ahead and look at our watch list. So the first one is Allscripts. I think we already looked at that. It's MDRX. Yeah, so that one we took a look at. The next one we just added, and this is called European Wax. Kind of an interesting name, and that's EWCZ, European Wax Center, and this is for waxing experience by trained estheticians. And it's another one. It's a recent IPO that has a little bit of problem getting out, but we're starting to get above some of the coming back up from the lows, and we've been looking to get it right around, here. So we're not quite there. We're really pretty close. We have our buy at 31.85, a little higher here. We're above this high here. This is 31.80, a little bit higher than that. And we closed down below. It's a little riskier buy first because it's an IPO. It's been quite volatile. And you do have some of this supply over here. So if you look over to the left, we have just this one area in November where it kind of spiked to new highs and sellers came back in. So a little bit risky. If you don't like this, you could wait. Maybe it'll come back up to its old highs and then kind of pause there, give us a kind of a nicer cup pattern. This is just kind of a consolidation and then a move out. So, but that one we're watching. Next one is CVS, another healthcare. You're starting to see the theme. When you see more and more stocks coming from, certain sectors, that's a good sign. Now, this is also, of course, a retail drugstore, but they also are moving more into like their minute clinics, I think they call it, and they're starting to not just have pharmacy, but more overall healthcare and providing a nurse there and be able to do stuff that you would normally do in a doctor's office. So this one's forming a nice cup. We're just looking to break above this little resistance here, a little bit early entry before it gets up to its old high. So we're watching that one. Next one is Concentrix, CNXC. So this is actually a tech company, software. So it's one of the few ones that's not making new lows. Earnings are in 3 days, so we might just we're going to watch this, but we're trying to see a break above over here, sort of an early entry. But we'll hold off on this because come Monday, I think the earnings are on Tuesday or Wednesday. So that one we're just going to buy. We're going to wait, I'm sorry. Another healthcare, HCA, not as strong as Anthem or Molina. It's a little bit of a laggard, but it is on the list. It could turn around and become a good player. And then finally, we have a Tractor Supply, ticker TSCO. This is the retail stores that are all over the country. It's broken out, but it's been quite volatile here. So we're trying to get it if it breaks above recent resistance here at 260. 235.58. It's actually over here. And ours is a little weak. And we don't like to buy anything unless we'd love to get it into upper 90s. So this is it's the bottom of our list. We're watching it. So maybe it'll tighten up and give us a little bit better entry. It's just been a little sloppy and problematic over there. So the final one for the long-term outperformer watch list, we do have Brown and Company, which was on our other one. And we have one new one, which is Wesco. And Wesco, they're in the electronic parts. They distribute industrial electrical construction, maintenance, repair, and operating supplies. Pretty good. Let's take a look at the monthly. Again, this is one, it doesn't have a great history, but we're getting a really nice move up coming off the 2020 lows into new highs. That's the monthly. We'd like to see more of like we saw with the previous one. We just have a nice long uptrend. The weekly though looks pretty good. We came down to the 200-day, the 40 week. Let's see, that's the 40 week and got support. We had a little plunge there and it came straight back up. So it's looking pretty good. Here we are, we're just trying to get it coming above here, so we're watching. It's it's an early entry. Normally we try to wait till it comes up to old highs and breaks above it, but we're going to try to get it there. So those are all the stocks on our list. I think the candidates overall are getting a little stronger. We had some weeks there not long ago where there was really not much, and then they were kind of a little iffy. I'd give a lot of these a B. Some are B plus. We don't really have a lot of A setups. It's just because of the volatility of the market and a lot of the things, rotation and things going on. But it's getting better. And I think if we have any kind of correction coming up, that will enable a lot of stocks to, if they're strong, they won't go down, but they'll start forming handles or tight areas like this and give us little crisper areas to try to buy. So overall, it's improving. We do have more stocks coming into our lists. The breakouts are starting to work better, and that's all we can ask for. So we just continue to flow with the market. We'll see what happens next week. If we're getting good constructive moves on our positions we own, we'll maybe add some more exposure. If you're not in, you should have some kind of exposure at this point. There are some good names on the ready list that are ready to go. If you want to kind of look at it from RS ratings, look for the highest ones first. The first one was Wave Dancer. That was a little volatile because it's that IPO, and it did kick us out once. HBQ just broke out. That's our next one, RS of 92. Brown and Brown also looks pretty good. And that's also on the long-term outperformer list. Let's go back here. Yeah, here's the Brown and Brown for the monthly. And you can see just nice long uptrends. Maybe not a fast mover, but it does have good, strong earnings and sales over time. It's just, the insurance broker. They have a lot of recurring revenue. So it does look pretty good. So these are kind of the ways I would look at it. These are probably the ones that we will add to if we add some more exposure, unless something just pops up out of nowhere and gives us a better thing, but then we'll put it on our list. So anyways, that's it for this week. We'll be back next week. Okay, thanks.